Alright everyone, Cowboy Trades here, welcome back to the channel. So, surviving the Bitcoin bear market, let's talk about it today. We're going to start off on the news and a quick TA update on everything that's happened in the markets this week. We're also going to talk about my most recent Bitcoin trade, what levels I'm looking at for my next short position, and then we're going to wrap up the video talking about my Bitcoin bear market survival plan. Basically, everything from what we would need to see to pivot, DCA strategies, and where and when I'm buying, down to the exact percentages for each DCA range that I plan on accumulating at. As always, if you do enjoy the content, make sure to smash that like button, help me get this video trending. So with all that said, let's jump right into this. Now in terms of the price action, to be honest, really nothing has changed, so I am going to zoom through this. We made a video about a week ago talking about some macro patterns down here on the fresh perspective that all kind of pointed to this breakdown in the next coming weeks. And if we come back over to the 4-hour time frame for Bitcoin, and as you can see here, we've highlighted the trading range that we were in on Monday. If we extrapolate this out, you can basically see that it has been another week of boring, sideways, choppy price action. This crab market has been lasting for a while now, so really nothing's changed. However, coming over to the 1-hour time frame, giving a slightly lower time frame perspective, you might be wondering in the past couple of days, what has kickstarted this most recent rally? Of course, when I say rally, I can't even really say it with a straight face because, you know, this is the 4-hour time frame and this is the rally that we're talking about. So I really do still see lower lows, lower highs. Really nothing has changed for me, so do take that into consideration. But yeah, like I said, 1-hour time frame, as you can see, we have started booting up. So what's happening over here? Well, approximately at 8:50 a.m. we had a news report from the Wall Street Journal basically affirming the Fed's likelihood of another 75 basis point increase, which by the way is likely to happen in our next FOMC meeting, which is just under 10 days away. It's going to be coming into fruition on the 2nd of November. But back onto and over to the actual article, nothing was really stated that we don't already know at this point. Like I always say, if you're a seasoned veteran of this channel and you have been following my videos, you know exactly the Fed's opinion. I won't be going through all the news statements that the Fed constantly say. The Fed are always talking about how they're trying to increase the interest rates, lower inflation. They see this carrying on until December. Some of them see this carrying on until March. Basically, the main point of this article was that Fed Governor Waller confirmed that there were going to be talks about tightening, or the pace of tightening specifically for future FOMC meetings. And since all of this came about, hashtag FOMC has started to trend over on Twitter. So it's not really ambiguous as to why we have started pumping in the past couple of days. If we head over to the SPX, bear in mind the next few charts I'll be showing you on the 1-hour time frame, so you can really see as soon as this news article kicked in, we kind of broke up, tested this range again, and started pushing up to the upside. The S&P 500, since this news came out, had approximately about a 3.3% rally. If we head over to the US government bond 2-year yields, now bear in mind, I could have looked at the 10, I could have looked at the 30, I don't want to show you a range of charts today, but approximately when this came out, round about here, as you can see since then, we went down about 3.5%, down about 3% now, so you can see the correlations in these as well. DXY obviously highly correlated to the government yields, or government debt, as you can see. Very, very similar trend over here since this news came out. This is down about 1.5%. And the same, of course, happened over on Bitcoin. You can see just over here, 8 to 9 a.m. This was when this news article came out. If you are looking at the news article, by the way, you might notice that this has been edited a few times, so the date will be different to the time that I originally gave you. But if we do head back over to this Bitcoin chart, you can also see similarly up about 3% since this news article came out. And really, we kind of broke down, tested the lows after this news came out, and we started shooting up to the upside. So how do we make money when these markets are slow, boring, choppy, and crabby? Well, this is where the Discord comes in. Obviously, if you are a seasoned veteran of the channel, I hope, of course, that you got into the last trade on our channel. We talked about it over here, Bitcoin trade now is happening, and we talked about how we were stopped out in our Whiplash season video. This was a trade that was 10% in the profit. Now, if you do come over to my Discord, as I always say in my videos, you are missing out on a lot of my movements in the markets if you're not part of the Discord, because we did have a Discord exclusive trade running from the other day. We entered this on a 10x leverage short at approximately 19,350. Take profit down here at 18,750. This would have been, like you can see down here, approximately a 30% trade, and this was the snapshot of when the price came down to exactly our take profit. And Bitcoin actually bottomed on this hour after we came down to our take profit, so we really had a good take profit on this. Like I said, over on the Discord, there was a Discord exclusive trade, approximately 30% in the profits. Also, if you're part of the YouTube, you would have got this trade. So basically within a 8-day time frame, I think we posted this over on our announcements, these were the two trades. So within 8 days, we were in collectively 39.5% profit. So always remember, I do highly recommend that you do come and join the Discord. You are going to be missing out on some of my moves if you do not come and join the Discord. I obviously want everyone in all of my communities to be making money all the time. However, there are going to be times where things happen like this. You know, news reports happen out, price action touches a specific range and starts nuking, volume comes in. Sometimes I do have these time sensitive updates, trades that I can't record a 10-20 minute video for, edit it and then upload it, and you can still enter it and be profitable. This is where the Discord comes into play. I am going to start providing some more Discord exclusive trades to obviously benefit the people who are in this community. So if you are in all of my socials, there's no reason why you shouldn't have had at least 40% profit joining me on my trades for the past week or so. So congratulations to the Cowboy family. If you do want to join, it's completely free. Head over to my channel, click on the about. You can see all my socials down here. Twitter, Instagram. I really don't use Instagram, so I never really recommend anyone to go over there. You can, of course, if you want to. Much more private on there. Over on my Twitter and my Discord, I do share exclusive charts, exclusive trades. So once again, make sure if you're a member of the YouTube that you are joining the Discord, you are joining the Twitter, so you can get these extra trades and we can profit even when the markets are really choppy and boring. But as you can see, this was where our take profit came into play. 18,750. We came down to 18,660, $90 lower than our take profit, and then we started bursting to the upside. So even with this run to the upside, we were out of our trade. We had already made money, so it's no matter to us. What I'm doing right now is I may not actively be in a trade, but like I said, I do have my eyes on this Bitcoin chart that we talked about a little bit earlier. If I do come back to it, round about 20,000 or so, this could be the next position of strength that we will be shorting from. Like I said, this will be something I'll keep you up to date on, so do make sure you come and join me over on Twitter. Do make sure you join the Discord. Turn notifications on for YouTube, even when the markets are boring, crabby, sideways, choppy. And in the higher time frames, of course, we want to DCA at these lower price targets. There is still room for profit to be made in these boring ranges. So that's all I'll say about that. Let's move on from this. So yeah, we talked about the lower time frames, but obviously in the higher time frames, really nothing has changed. It is interesting, of course, to see that Bitcoin is still holding up at this support range. We're really holding this level, but you know why this is interesting is that government bonds, government debt is becoming super profitable. Now, when we do look at government debt in the form of course, the 10-year yields, today, or not today, sorry, on Friday last week, we pushed up to 4.35%. That was obviously new cycle highs. Zooming out on the weekly time frame, this is the highest that we've been since 2007, 2008 territory. Obviously, with US government bonds or government debt becoming more expensive, this is entailing that markets are obviously in a risk-off phase. Government debt is, you know, one of the lowest return, most conservative trades that you could possibly make as an investment. So really, when people are buying government debt, you know that markets are in a risk-off phase. So like I said, it's interesting to see that we are having this divergence where US government debt is still going up. The SPX, higher time frames, is really still going down. We've seen, you know, the NASDAQ, S&P 500 mini futures, S&P 500, the Dow Jones keep on coming down week after week after week after week. You know, at the end of every week, you know, yields are hitting new highs. You know, the SPX, the stock market indices are breaking down. But Bitcoin is still holding right about around. Bitcoin is still holding right around this region. Now, I'm currently not actively shorting for a few reasons. One being this over here. Markets are being irrational right now. Obviously, we talked about the news a little bit earlier on, and markets can stay irrational longer than you can stay solvent. So if we do continue rallying, like I said, I will be on the sidelines waiting for that next position of strength. In the past week or so, like I said, we're about 40% in the profit from our trades. So while we're waiting for this breakdown, it's trade by trade by trade, profitable trade after profitable trade. We're making money and waiting for that next breakdown to the downside. Like I said, for this reason, with Bitcoin breaking outside of this triangle pattern, I would definitely advise against shorting. Obviously, if you are a bear and you are in a short at this moment in time, unlike myself, I'm a bear, I'm not in a short right now, this would be cause for concern. So like I always do say, I am a bear right now in the higher time frames. I do think we're going to break down, but I always do look to present an unbiased perspective on what I do see happening in the markets. This has just been basically the only bullish thing that I've seen in, months now. So it is what it is. Like I said, I'll always provide an unbiased perspective. But if we do come over to a slightly different variation of this chart in the higher time frames, this triangle pattern has more touch points. It's been going on for a longer period of time, so this definitely has a bearish spin on things. Now, we could still be in this triangle pattern, which looks like a continuation pattern, up to about 20,000. So this could definitely be the next position of strength that we could be shorting from. Like I said earlier on in the video, I will keep you up to date when I do think that next Bitcoin short is in play. Like I said, we've been making money for the past week or so. I'm in no rush to rush into a trade for the sake of it. I'm sure that would get more views if I constantly said every video that I was in a new trade. But this is not how smart traders work. We don't need to trade every day. We don't need to look at every trade opportunity. We're keeping our eyes peeled for these trades that have the highest probabilities, which is of course why, if you've been taking any of the trades that I've given on this channel, all of them have been positive. We've never given a call which has been stopped out in the negative. And this is because we pick and choose our fights. We pick and choose our trades very carefully. I'll keep you up to date. I think 20,000 is going to be a good region to short from. But with that being said, I'll keep you up to date. Nothing's written in stone right now. We do also have, this VPVR zone. The most amount of volume was accumulated. We have traded for the most amount of time around this 20,000 region. So we could, market makers could want to push us up to 20,000, grab some liquidity before pushing back down. But we also have that FOMC meeting in about 9 days. So, could we push up and start breaking out? Yeah, it could be a possibility. I don't have a crystal ball. Like I said, these are some of the reasons why at this moment in time, I'm sitting on the sidelines waiting for that next position of strength. I'll likely wait until we're around about 20,000, and I also do want to see the FOMC meeting out of the way. We normally do price in these FOMC meetings, and then we end up rallying for a week or so. So like I said, I'll keep you up to date on the next short position. Nothing's in stone right now. There's also not really anything to update in terms of the smart money. Like I always say on my channel, we have been following the smart money, looking at when they start accumulating. At this moment in time, they're not accumulating. If you go over to the retail wallets, they are accumulating. And similarly, if we look at the metrics for the ratio of retail to institutional addresses, what you can see here is basically, as it says over here, when the blue line goes down, this means there are more institutional investors in the markets and the ratio decreases and Bitcoin is likely to surge. There have been times over here, like for example, 2017, 2018 rally, you remember a lot of institutions were getting into the market. So while this blue line was decreasing, this means that the ratio of retail in comparison to institution was decreasing. And like we know, people like Tesla, Michael Saylor, MicroStrategy, Michael Saylor runs MicroStrategy, you get my point, or he used to, potato. If we do reset this, you can see previously the most recent bull run was institutional driven. So I will be waiting for these smart money institutional metrics to start coming back up and accumulating. Just wanted to let you know nothing's changed. But if you do, obviously turn notifications on for the channel. I'll keep you up to date when anything important happens from that perspective. Also, like I said at the start of the video, I'll be providing you with my Bitcoin bear market survival plan. And one of the things that I said at the start of the video is that I would inform you on some good DCA strategies and good strategies on when to know when to pivot. Now, a good time to pivot could be when smart money starts accumulating, when the retail to institutional addresses ratio starts going down, meaning more institutions are getting more interested in cryptocurrencies. Right now, it's purely retail driven. So once again, just in my opinion, opinion, this would be a good region to kind of look at for a pivot. Another way that you could be looking at pivoting is you could be waiting for the next Fed meeting, or you could be waiting for a Fed meeting in which interest rates aren't actually raised. Perhaps they go neutral, perhaps they go negative, at which point you could start seeing the US government bond yields, the government debt start to decrease, and at which point that would be when we would see a Fed pivot. Now, like I said, just giving you a few ideas on a few strategies that I personally have my eyes on. I recommend that you stay malleable, be like water, be very flexible, take the shape of these markets, don't get caught up in just one DCA strategy, I'm gonna 100% buy at this price, I'm gonna 100% buy when the Fed pivots. I definitely recommend you should make an amalgamation of these, listen to me, listen to other people, make your own trading plan, do your own research. Also waiting for things like the US 10 years minus the 2 years to start going up, because while this is going down, it further implies that, government bonds, government debt is going to become more profitable. People buying government debt, once again, means that we're in a risk-off market scenario. It is really as simple as that. So let's wrap up the video on my Bitcoin bear market DCA strategy. I'm going to let you know exactly what price levels I'm buying from, where I've bought from so far, and within these individual DCA ranges, what percentages am I allocating to these regions? Now, let's talk about it. If you're a veteran of the channel, roundabout this was a very, very long time ago. So when I say veteran of the channel, I'm really talking about if you've been here for more than, 130, 150 days or so, because when we were back round here trading at 32,000, 30,000, I was letting you know that my plan to start accumulating happened at 25,000. Now, I made it very, very simple. I said in $1,000 increments, I will be buying to the downside, meaning I bought at 25, 24, 23, 22, 21, 20, 19, 18, and as you can see, we came down to about 17,600. So obviously stands to reason that my DCA orders down at 17,000 didn't get hit. So I've already DCA'd between 25 down to about 18,000. Well, down to exactly 18,000. Now, when I initially started talking about when I'm going to be DCAing and what percent of my portfolio I'm going to be allocating to this, I originally told you this was going to be 15% of my portfolio, and this has remained true. However, since then, as you can imagine, I have made more money from trading, etc. The other things that I do in my outside of life, outside of YouTube. Obviously, it's not exactly like YouTube as a source of income for me. YouTube pays me peanuts. I'm really not here making barely any money whatsoever from YouTube. I've probably made like $1,000 from YouTube, and I've put like hundreds and hundreds of hours into this. So, obviously YouTube is not my main source of income. I make money from trading, I make money from businesses, I make money from other things, working with kendo associations across the UK. I'm an economist. I'll talk more about what I do maybe in the future. I'll dox myself more, talk about what I do. But since then, like I've been saying, I have made a little bit more money, so I have got more money that I'm actively willing to put into the market. So I did want to let you know when I do now say that only 10% of my portfolio was allocated in these regions. If you were a veteran of the channel and you watched maybe 6 or 7 months ago and you heard me say 15, this is now the reason why, like I said, I've made more money since then, so I'm willing to put more money into the market. So far, I've only put in about 10, maybe 11, 12% of my portfolio. I'm approximating, of course, around these regions. Now, when do I next start to buy? Well, it's very simple. Like I said, $1,000 increments to the downside. Now, you might be looking at this, you might already be throwing rocks through my window, getting ready to type, thinking, how does this guy think we're going down to 11, 10, 9, 8, 7 and continuing from here? I don't think we're going down to these levels, but I am willing to allocate some money in case of a worst case scenario. I'll go through this step by step. So the next time I start buying, I'm going to be buying with 60% of my portfolio. This is the main region that I want to start buying. Like I said, if you're a seasoned veteran of the channel, I've been saying between 17,000. I've really been saying I think we bottom between 16 and 14, but I'm happy to start, very aggressively DCAing at 17. So with that being said, if you break up this 60% allocation into 4 quarters, meaning, you potentially could invest 25% of it here, 25% here, 25% here, 25% here. I plan on putting in a lot of my money between these regions, meaning if Bitcoin comes down to 14K and that is the absolute bottom and then we just start rocketing to the upside, I would have put in 70% of the total money that I'm willing to put into these markets. Now, For me, or let's say for you personally, you might think there's no chance that we're going down to 13 or 12. You might be very new to these markets. You might be very, very eager to put your money in Bitcoin. So what I will say is my trading plan is not going to be perfect for everyone. I've said this before. I've been in this market since 2017. I've been buying Bitcoin since $700 in sub. My average buy-in price is just below $8,000, around about 7,700, 7,800 the last time I checked. So for me, you know, I've been DCing at much lower levels. I'm happy to put a small amount of my portfolio at much lower levels that I fully admit we may never go down to 13. We may never go down to 12, 11. I really don't even think we're going down to 10 or 9k. But what I will say is if some terrible news happens, you know, world wars start breaking out, you know, obviously it could get a lot worse than this. I'm just giving you a few ideas here. I'm just letting you know if we do start coming down to these lower price targets, I will be prepared, although I don't necessarily think we're going down to these levels. Now, if we come down to 13 and 12,000, I will also be happy to invest about 20% of my portfolio at these regions. And once again, like I said, don't throw rocks through my windows. I don't think we're going down to these levels between 11,000, 9,000. I haven't even put anything lower than here because I just don't really think I need to. But with that being said, you know, the worst case scenario, if we come down to these levels and, you know, we never fulfill this last 30% of my portfolio, that's completely fine for me because it's all about opportunity cost. Now, there are things that I'd be more than happy to buy down at these regions. For example, I'm a big fan in katana-based martial arts. I practice in kendo, kenjutsu, yaido, yaijutsu. So, you know, potentially I could buy myself a full suit of samurai armor. I could buy myself a 200-year-old daisho Uchi Wakizashi set. I could buy myself a Naginata. There are tons of, you know, things that I want to spend money on that cost, you know, hundreds of thousands. So with that being said, it's all about opportunity cost to me, and this is why my trading plan might differ from yours. Once again, I'm not saying that we're going to go down to these levels. What I am saying is I'm willing to invest this amount of my portfolio at this level. I'm willing to invest this amount at this level, this amount at this level, and this amount at this level. Once again, this may not be valid for everyone. I must admit for myself, if I was new to these markets, if I had only just started buying Bitcoin, I'd be looking to have my long-term DCAs as cheap as I can get, meaning, you know, I might be putting in, you know, 70% of my money here. I might have already put 20% here, and I might only be willing to allocate 10% at these levels. Like I said, this is my trading plan. This is not meant to catch 100% of my DCAs at the exact bottom. I've always said I don't have a crystal ball, contrary to popular belief. I don't know when the exact bottom is, but I do know, according to my trading plan, according to my trading strategy, what I've been sticking with for about 7 to 8 months now, is that I'm willing to put X amount in at this level, X amount in at this level, X amount in at this level, and X amount at this level. For once again, make your own TA, make your own plans. Like I said, this is not the only thing I'm looking at to DCA in. For example, if we come down to, you know, let's say hypothetically we come down to 15,000 and the Fed pivots, at that point I could change this trading plan completely. I might be willing to invest the money that I was going to put in at 14, 12, 11, 10. I might be willing to put that in right then as the Fed pivots for a short-term trade. This is why I always recommend that you turn notifications on for the channel. You come and join the Twitter, you come and join the Discord, and I will keep you up to date on all of my trades, all of my plans, when I think we're bottoming, when I think the right time to pivot is. But for now, Cowboys, that's all I've got for you. I hope you enjoyed this video. I hope this video gave you some insight in some of the things that I'm looking at. For example, waiting for the Fed to pivot, waiting for bonds to top out, waiting for institutional money, smart money to start getting back into these markets. These are some of the ideas I have that are going to help me personally navigate these Bitcoin bear market lows. As always, do come and join the Discord if you do want to get these extra trades. You are going to be missing out. You are going to be missing out on a lot of trades because I'm going to try and start putting in more of these exclusive trades over on my Discord. Of course, like I said, all of the main trades will go up on my YouTube. I do obviously want as many people to profit and make money from my trades as possible, but sometimes news events happen like this. You know, we come up to a price target and instantly volume comes in, you know, a perfect storm happens, and I don't have time to record a video. This is, of course, when you want to come over to my Discord, turn notifications on. If you do join, make sure you've got notifications turned on for announcements and Bitcoin updates. You know, anything else you turn notifications on, it's optional. Like I said, these two are the main ones you want to turn on if you do want to be notified for my next trade. So for now, Cowboys, that's all I've got. Very, very boring, crabby price action for right now. But like I said, come and join the chat. We will be making sure that you are profitable even when these markets are boring. For now, Cowboys, that's all I've got for you. Cowboy out. Peace.